for the majority, the save plan, the new plan that's out there, is likely to be the lowest payment option that leads to
Hmm.
loan forgiveness,
Yep.
particularly as it relates to public service loan forgiveness, PSLF. The reason being that it gives you the lowest payment option because it calculates the payment differently than all the other plans. It still allows you to separate income by filing taxes separate. So you get the benefit of either option. You get the choice to file separate or joint on this plan and choose which one's more beneficial. And then that interest subsidy is helpful as well if you happened to leave the PSLF program at some point, just refinance. So where that tends to make sense, and I'm going to give a rule of thumb if that's all right, but would be if your income is roughly half of your student loan balance or more. Let me go back and try and phrase that because I think I'm getting it backwards now. But if your loan balance is twice as large as your income, you're definitely going to be you're very likely to be better off with the save plan than anything that has a cap because it's going to be hard to reach that cap. You're never going to reach that cap at twice the income or twice the debt is your income. But if you're higher income and lower debt, so if we get more like to that 1-to-1 ratio, the closer you get to that, the more due diligence you need to do. The reason being that the save plan does not have a cap on how high payments can go. So even though it's got a lower payment calculated, it's still a percentage based payment. And if that percentage is higher than what you would pay on another plan, it's going to keep going up. And Daniel, can you remind us what the payment cap is? I'm talking about this payment cap, but can you help us
The
out there?
PAYE payment cap. Yeah. So the PAYE payment cap, it's a set limit amount of what you possibly could pay per month based on the 10-year standard repayment plan. So it's the payment you would have had to make it paid off in 10 years. So say, for instance, if you're going to say you owe 100,000 on student loans and you're making $1 million in a nonprofit hospital, like you're going to cap it out. Like you're way over the cap on PAYE. That's an easy scenario where it's like PAYE still has a huge benefit because on the other plans, there's no cap. So they base it off $1 million of income. But that's not, I mean, in our experience, that's not the majority for sure.
Right. And so let's give that example there. $1 million in income, $100,000 in student loans, 10 years of payments. And let's forget interest rates for a second, Daniel. So 10 years to pay off $100,000 of loans would mean how much would you be paying every year on 100,000 student loans over 10 years?
$10,000 a year.
Right. $10,000 a year. And then to contrast that with a payment based on $1 million in income, that's all
Huge.
it gets to be $8,500 a month, roughly. You could basically say $10,000 a month.
Yeah.
It
So
gets
you
to
just
be,
pay the thing off in a year and get no forgiveness.
but, and so historically, that 10-year payment amount, that cap, if you were to just make 10 years worth of payments, they're paid off anyway in 10 years. There's always been some advantage to the crowd that we work with as you've gone through likely lower income years with high debt as you're going through residency, fellowship. And so you get 3, 5, 7. I mean, you can get a lot of credit depending on how much training you go through towards PSLF, where you're not paying at the level that it would take to pay it off in 10 years. So if you'd ever paid it lower than a 10-year payment, you're getting
It's
a benefit
value.
out of PSLF.
And then
That
if you throw 3-year COVID forbearance on top of it all, add another
right,
3 years.
right. But if you were in that scenario going to pay it off anyway with a plan that had no cap, then you could have benefited
Right.
on PSLF, but not on that plan. If there's a
Mhm.
cap on the plan, it doesn't help out.
Yep. So you
And
want to
so,
preserve that cap. If your income is, I mean, I think either your balance is low. That's another scenario that can happen. I've seen that happen where maybe your income is not really, really high, but like the ratio of your income to your loan is pretty high. So maybe you had 50,000 of loans and and you have an average physician income. You probably are getting close to exceeding the cap, I would say, or maybe I guess you probably would exceed the cap in the save plan. So you probably ought to think about like preserving some sort of income cap if you can.
absolutely. So that would be the time where you want to see if that payment cap is going to be beneficial. So high income compared to relative to the loan balance is where that comes into play.
Mm-hmm.
For the vast majority that I've looked at and analyzed, though, that income disparity, especially when we're talking, I'm going to call this normal student loans. it kind of hurts to say normal when we say
Right.
$250,000, right?
That's pretty average.
But if you have normal med school loans in the $250,000 range, the income it takes to make that cap favorable to you at this point tends to be relatively large. So we're talking probably looking at $600,000-$700,000 level before where
Like
that
more
break
than
even
double.
happens. So
Yeah.
and that's certainly going to depend on each set of loans and income. That's a good way to think about it.
So now the save plan, though, so most people are probably going to be better off in this save plan. You know, the minority will be better off sticking with like PAYE, or even I could see IBR being beneficial in some cases because it has a payment cap as well. That's an old repayment plan we haven't even talked about. But there's cases where those are like the exceptions where you would benefit from those payment caps. But most people are going to go with the save plan or be better off in the save plan. And that's the default. If you were in repay, you were automatically switched to save, right?
Yes. Yeah. So revise
They
pays you
didn't
money.
ask you anything. They just went ahead and moved you.
It's morphing like a Power Ranger into a new
Morphing.
plan.